Good morning, good day, good evening. Thank you so much for coming again on this broadcast. It's your boy again, Pedro. Um, Here to give you a quick update on what's going on in the markets, uh, where we currently are, and where we are likely headed. So I'll be heading straight into action as there's a limited time to work on. So I'll be on the last broadcast, I spoke about a potential double. I spoke about the market being at a decision point as to determine if this bearish run was a pullback or um a major bear run to the downside, to the south side. And then they had a decision to make at this junction. uh, the low of 30th July coming at around 38,342, which coincided with the 200 EMA, and markets had to either break or bounce off that level, and that actually ended up being a close below that level on a daily basis, and even on the 4-hour basis. Uh, so that was to validate a potential head and shoulders pattern on the 4-hour chart. Uh, this this closed the day on August 3rd below that level, but was immediately countered by the bulls the following day by a close back above that level, which wasn't just a normal close but a bullish engulfing close by the bulls. And it was interesting to know that that's the end of that. So that signaled the end of uh, a retracement, and was to be like the beginning of a back, bounce off, bounce back, an impulse bullish move from that level, and that's this level, which seemed to be like the end of the retracement and a bounce and a start of another impulse move by the bulls seems to be in confluence with the 38.2% retracement level of this strong bullish run, this strong 10-day turn straight day green run by the bulls um, towards the end of last month. You can see here this is 38.2 sitting on this level. So that seemed to be an interesting level to retrace from, and you can see that we had this bullish engulfing pattern formed, and this was followed up by another bullish engulfing candle, which seems to be like a bullish pin bar, but it was actually a bullish engulfing which engulfed the previous two red candles and then the last green candle as well. So this end of the retracements further formed um, a mini double bottom on the daily charts, with the high of August 4th coming at 39,965 being the neckline. This was also shared. Sentiment was also shared on the 4-hour chart with this proper bully, double bottom with the same neckline, which was validated that same day at about 2000 hours UTC with a 4-hour close above the neckline. This was also shared and validated on the 1-hour charts. You can see a strong move downward with the same neckline at 39,965, which was also validated by 1-hour close by 1700 hours UTC, a 1-hour close above that level. So the target for this double bottom pattern was exactly 42.6K, which was the high of August 1st. So this the close, the daily, there was also a daily close above that level on August 5th, which validated it on the daily time frame and sent prices north to 42.6. So the moment we got to 42.6, it's completed the target for that semi mini double bottom pattern formed on the daily time frame and the uh, uh, double bottom formed on the lower time frames. So there was an immediate resistance on getting to 42.6. So a close below 42.6 on a daily basis would have validated the potential formation of a proper double top bottom, double top for, pattern on the daily time frame. But a close above it would have invalidated that pattern, and that seemed to be the case as at yesterday's close, which was at 42,869 dollars. So that happened, but in my opinion, that is not a very convincing close. So I still see some life in that, some life, still some life and little hope for that pattern, because since we were still seated deep inside, the bulls are still seated deep inside enemy territory, this is not a good place to buy. It's not a buy zone for me anytime, any day until we get past this zone and on at least a daily closing basis and at least defend it properly before I can have a conversation of going long in this market. So this is deep inside enemy territory for the bulls, and it's a region that is a huge supply region, and then anything can happen in this region. It's their territory, so it's gonna be dangerous trying to play long in this region. So that has been the case for the market so far, and I have my takeaways. So far, the question now becomes: is this different? Any different from what has happened before in the market? I don't think it is. We're seated deep inside enemy territory as it stands now. Has that been the case before? Yes, maybe not deep, but yes, we have been here before, and then there's been a bounce back, and we've also been to the south side, the 30K territory, and there's been a bounce off as well from the region. As you can see, last month we had we're deep inside enemy territory. The bears were also deep inside enemy territory, and it seemed like all hell will be let loose on the market. And then this happened for this 10-day run. We know the bulls and the bears are practically the same people, same guys who send prices down south are the same guys who send it down, who would also send it down north, up north. So uh, the question is, are they done playing games? Um, Time will tell, and I think we should be finding out in a very short while, longer than expected. So, right now, the difference between what is happening and what has happened before is this: the fact that during the last bearish run to the 30K territory, that seemed to mount enormous pressure on the bulls and then force this descending channel to form. Volume was practically dead. There was no serious volume by the bears to mount any serious challenge on the territory as to enough with enough effect to break through. So, but on the On the contra, the difference between the bulls, on the contrary, have volume to the on their have volume on their side. Maybe not too much volume, but at least far better and improved volume than what the bears had uh, before. So we can see a steady increase in volume. Then there was a decline as we approached this territory, and the bears took over as a result of that decline. Had a slight increase, and then the bulls have taken over, and you can see that there's been a steady increase from the bulls. Um, so it's the bulls have had volume, better volume on their end than the bears. So there's been a loss of momentum from the bulls, from the bears, and at the moment everything seems to be working out for the bulls because you can see it took the bears 4 days to bounce off this resistance and come down to this retracement end to end of the end of this retracement. It took the bulls 3 days to do even more than what the bears did. They've made a bigger move in 3 days than the bears did in 4 days. So that shows a loss of momentum from the bears and bigger momentum, a stronger momentum from the bulls. So everything seems to be working out for the bulls at the moment. Another thing is the fact that what seemed to be is bounce off from resistance and start of a proper bearish run down south, as has been the case in the past. Here, um, here, 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 has now been converted from a proper bearish run into a retracement for the bulls. So this has not happened before during this consolidation. So these are the differences. These are the things that we should be looking out for to be working out differently and better for the bulls this time around. So this has so far resulted, and you can see that this is also clearly shown with back to back from this from the end of this retracement and from the start of this impulse run. We've had back to back bullish engulfing patterns on the daily time frame, which to me is as a result of something that has happened on the bigger time frames. I will be drilling up to the weekly and the monthly time frames to quickly show you, just in case you forgot. I think I made mention of this in my last broadcast, but I'm going to be doing that here again. You can see that on the weekly time frame, we had this bullish engulfing pattern, which has been followed by back-to-back green candles on the weekly time frame. And coming from the second biggest time frame, um, this is something worth noting. What something worth worthy of notes. It's worthy of note. Something worth taking note of because it is actually bouncing off a major support that has actually played key, which has actually been key in this market and in this consolidation. And then this sentiment has also been shared by the biggest time frame, which is the monthly, having this huge bullish engulfing pattern and candle on the daily on the monthly time frame, also bouncing off a major support. It's also something that should not be ignored at all. And you can see that as a result, we've had this follow up of another green candle forming currently on this month time on this month as well. And it's also very important to note that this green candle, that bullish and candle, is the most perfect of all three big time frame candles, bullish engulfing candles formed: the daily, the weekly, and the monthly. The one on the daily time frame that was formed on the start of that bullish run, the one that I just showed on the weekly time frame, and this one, this was the most perfect because this actually completely engulfed this with the open below the close of the previous candle, and then the close even above the high of the previous candle. So this was a very perfect, the most perfect of all the bullish engulfing candles formed on all the big time frames. And this is also worthy. It's also important to note that this was the first bullish, first green candle in 4 months for the markets, and all what seems to be like start of a serious downtrend for the markets on the daily time frame and on the weekly, which are big time frames, and the proper what seems to be like a proper downtrend already on smaller time frame. It's all nothing. It's not all but a major pullback on the monthly time frame. So the monthly time frame still looks very much bullish in my opinion. So um, and you can see that it's bullish. This is all but a major pullback, and it seems to be bouncing off. So all the effect of this bullish engulfing pattern on the biggest time frame is what you currently see um, materializing on the daily time frame. So to me, this is no magic. It's no coincidence. This is a simple, explicit, simplest explanation to what's currently happening in favor of the Bulls at the moment. So thank you very much. This is the much I can take today on this broadcast. I would be happy to know your thoughts as well in the comment section. And if you got value from this presentation, from this analysis, please let me know in the comment section. Feel free to smash this like and subscribe button and share as well. And remember that this is all for educational purpose and not to be seen as financial advice. Cryptocurrency, as well as any other financial markets trading, is a risky affair. Endeavor to carry out your own research before entering any trade. Thank you very much. Have a lovely week ahead. May the bulls be with you. Bye bye. Sorry, before I go, I remembered I forgot to mention one thing. The last thing the bulls need to do after taking off this place is to uh um the last hurdle they need to cross after properly invalidating this double top pattern is to close above the 45K, which is the top of the 42K, top side of the 42K zone, which coincides very much and coincides and is in confluence with the bottom of this ascending channel that was formed from the strong bullish run from the end of last month. So there's a ton of confluence around this area. There are other technical indicators pointing towards the 45K, which I will not want to go into at this point in time. So 45K is key. A daily close above, at least a daily close above that level, and a proper defense would give the market a proper chance of a bounce back and the start of another uptrend again. So thank you very much. Um, have a nice weekend. Bye bye.